Next week is a big one for bank earnings, and some stocks in the sector are trading at levels not seen since the financial crisis. Joining us with a couple of his top picks, Gerard Cassidy, analyst at RBC Capital Markets. Let's start. We'll go right from bottoms up, not top down. Maybe we'll get a little at the end. But what's your top picks, Bank of America, Gerard?
Yes, it is. Thank you for having me. And I think the outlook for Bank of America is quite strong. As you know, the U.S. economy this year is expected to grow at around 2%. This company is the best play on the American economy, especially the consumer. When you take a look at the growth in loans over the last 6 months, the data coming from the Federal Reserve on every Friday afternoon, consumer loan growth now is growing at about 12 to 13% a year. And Bank of America is one of the leading consumer lenders, as you know. And on top of that, they have a very strong focus on delivering positive operating leverage by controlling the expense growth. And I think Brian Moynihan, the CEO there, is one of the most underrated CEOs in the United States.
He's a very low-key guy, but the stock looks pretty good,
yes,
that's for sure. His performance there. They don't need high interest rates, right, banks? They just need a steep yield curve. And then even if interest rates are low, the consumer seems flush, and you get to loan more and everything else. So it's a kind of a mixed bag. You know, some people would like higher rates on a steeper yield curve, but that's not essential for these guys to do well.
I think you summed it up well, and certainly it helps to have a steeper yield curve. If we were to see the 10-year government bond yield by this time next year at 2.25, that would be very good for Bank of America and all the banks. But the loan growth is still there, and we expect the loan growth for the industry probably to come in this year 3 to 5%.
Let's do your other pick. Second pick gained 31% in the past year. PNC, the old Pittsburgh National. What's next for that bank?
Yep. When you take a look at PNC, PNC has done a very good job in growing their business outside of their mid-Atlantic footprint. As you may recall, during the crisis, they picked up National City at about 20 cents on the dollar. They did a great job with that. Now they're growing their business de novo outside of the mid-Atlantic. They're doing it through the commercial banking business. This is a leading company in the treasury management space, so they don't leave with loans, because you might remember banks, when they expand outside their footprint, when they do it with loans, oftentimes they get in trouble during a downturn. The other thing that stands out for PNC is that about 45% of revenues come from fees, so they're not as reliant on lending as some of the other banks.
Jim Rohr, I think. And that was National City was Cleveland. City National was L.A.
That's correct.
City National was L.A.
That's
National
correct.
City was Cleveland, just in case. And one of them had the symbol CNBC, I think, or anyway, close to it. Anyway, your third pick, quick.
Very close.
Yeah. What's your third?
The third pick is Truist Financial. This is the new name, as you may recall. BB&T and SunTrust, biggest merger in almost 20 years. We expect them to generate meaningful cost savings from this consolidation. We think it's going to be the real leader in the southeastern part of the United States. You've got the mix of two very strong regional banks, one out of Atlanta, the other out of North Carolina. But that would be the real winner, especially when it comes to cost savings in 2020.